Today is the 13th, all day. Let's start planning and scanning, and starting with what's different about this room is straight from the top, right when we walk in here. Daily positive thought. We're always going to start with a daily positive thought of my selection that is relevant to trading. The daily positive thought today: there is something more than important than believing. It's action. Not only do you have to believe you can trade correctly, but you have to put correct trading actions together. So what that means is that if you believe that you are going to be a successful trader, then you need to implement successful trading techniques. Not only that, but you have to implement successful strategies, and more importantly, you have to act on those. All right? So that's called trading, planning the trade, and trading the plan. As they say, the world is full of dreamers, but there aren't enough people who will move ahead and begin to take concrete steps to actualize their visions. So what would a concrete step be? Well, we start with planning and scanning. We look for trade setups. We write those trade setups down, those potential opportunities, and we implement a plan of attack to trade those particular strategies. The man who is credited for this comment is W. Clement Stone. Many of you already heard the story. W. Clement Stone visited. He lived in Winnetka, a little community I grew up in north of Chicago. W. Clement Stone visited my 8th grade auditorium. We all got a book that he wrote, a little paperback book, Positive Mental Attitude, and he co-authored it, I believe, with it was Napoleon Hill. I've taken that book to seminars with me in the past. I've had that book since I was in 8th grade. Now, he didn't really sign it, but he put a sticker with his signature on the inside book, and the whole 8th grade class at Washburn Elementary Junior High. It was a brand new school. I think it was only open 1 or 2 years. It had a 7th and 8th grade, Washburn Junior High, and boy, I don't even remember what year it was. So in any event, I was influenced at a very young age with the power of positive mental attitude by a local, I guess he was the local iconic figure, W. Clement Stone, who owned Alligated Insurance Corporation of America. So anyway, another influence in my life, at least from a psychological aspect. So with that said, today we've already had some economic reports. Obviously, the Purchasers Manager Index came out at 4 a.m. Eastern. The Great Britain PMI Service Index at 4:30. Germany DE CPI came out at 8 a.m. Consumer spending from the Gallup poll came out at 8:30 a.m. So today, moving forward, we have factory orders at 10 a.m., non-manufacturing index at 10 a.m. Eastern. This is all Eastern time. Ameritrade IMX, it's a new kind of indicator at 12:30, but I think the main key will be Dennis Lockhart, and all week long we have a few Fed members speaking, and we will be posting those times because they will have more probably of an impact than an economic report from Ameritrade's 12:30. I would say it's the 12:40 Dennis Lockhart you want to focus in on. Tonight, when we're getting ready to do whatever, Australia's merchandise trade figure comes out. Then tomorrow, when we're sleeping, or might be sleeping, Germany comes out with their retail sales at 2 a.m. on Tuesday. So what we're doing new in this room is just to prepare you for what reports might be out at night that have an influence to our markets. And I think that German's retail sales figure will have an influence, a little slight influence on the euro currency, and could have an impact on gold prices. So retail sales at 2 a.m. On Tuesday, tomorrow morning, and unemployment from Germany. The unemployment rate comes out at 3:50 a.m. The European Monetary Union, EMU, has its economic indicator flash report at 5 a.m., PPI at 5 a.m., and then tomorrow morning we have, before our room starts, even at 8:30 a.m., we have retail sales. And then earnings for today, Schwab, Wendy's. After the market close, we have Amgen and MT&B Bank. So those are what we have in store for today and tomorrow morning when we begin our day. So planning and scanning, first thing we do, focus on a trade, focus, on being disciplined, focused. Don't start your day unless it's finished on paper, which was last week's mantra. We'll save these things, and we'll see at the end of the year how many of these have been popular, and maybe you could write in and vote which ones had more influence and started to help put you in a more positive path in your trading and focus on the business at hand. All right? So now that we're done with that section of planning and scanning, which is a little bit different, I think it's a nice way to start the day, start the week on a positive note. We're going to take a look at scanning and planning, what stocks looked appealing, what sectors, for example. So since this is a once-a-week deal, let's take a look at what I think is probably the more important scans that we want to watch for. And for me, the most important scans that I would be looking for would be our Doji criteria scans. So let me put this, insert this. Here we go. Move this over here. The chart, just for those who are new and do not know. We start off with our first chart is a monthly chart, and I have quarterly pivots overlaid. The next chart is a weekly chart with monthly pivots overlaid. The next chart we have here is also a daily chart with monthly pivots. And we can change that over here and go with weekly, but I think it's probably for stock and ETFs a little bit more beneficial to take a gander at where we are in relationship with the price of a given market and its overall monthly pivot. The indicators down below, this is on balance volume with a moving average, which is red. Then we have the weekly chart with on balance volume with another moving average, which is red. And we have the seasonal trend. The reason I like to look at the seasonal trend is to focus with you guys at the same time as to what the trend is for this market. And so if we go back on a weekly chart, the way I've lined it up, and if you have it at least with the last 52 weeks, I can take a look at what the last 52, where the price of this stock is or this market, where is it in relationship to its 52-week high, 52-week low, and then I can also take a look at, most importantly, is are we in a seasonally strong or are we in a seasonally weak period of time? Stock in front of us is Mosaic. It just was the stock that was just up. I think we had a little discussion about this last week. Then over here we have our monthly chart. We can take a look at a multi-year range to see, boy, and in Mosaic, by the way, hasn't really even participated. It had one of those, the few stocks like potash and the fertilizer ag space, which had a huge run-up back in 2010. It has not participated with the market in the last year's rally. So looking at weekly stocks, I want to take a look at weekly, two things. How many stocks generated weekly buy signals? How many stocks generated weekly sell signals? That's what we're going to start with and focus. Out of those stocks, let's draw down and find out how many of those stocks are in strong sectors, seasonally speaking. Next, we're going to do one more thing, which is available for all of those who do get the My Person's Planet Genesis package, is the high close, low close scans for the week. Since the market, what we also like to do, and what I've done in the past, is to say, what's the condition of the market moving forward? Are the overall indices bullish, bearish? What was the breadth? What's the volume look like at the total scheme of things in the top 5 sectors that we have to look at? So I'll go through that in just a minute. When we take a look at low close doji stocks, this is daily. Of course, this would have been considered a doji. We had Alcoa with poor earnings, and of course the stock got punished a little bit here, lower opening. We don't want to focus on more low close doji, high close dojis on a daily basis starting the week. We want to start the week with how many stocks generated weekly low close dojis. So, and you can see in all stock categories, we had 225 names that generated a low close doji out of all stocks. But that's not what I'm looking at. I want to know how many stocks, and focus in how many stocks generated low close dojis in the S&P 500. And so now what we break down and say, all right, we had on a weekly basis, we ran a scan and said, out of these names, this is the high close, excuse me. I switched back over to high close. So on a high close doji basis, we ran a scan. I got to make sure I'm focused here. Weekly high close doji. There we go. So we had a weekly low close doji and weekly high close doji. Let's double check this, because on a weekly, all the stocks, we had 166 stocks in all stock category. That's 7,000 stocks or so that generated high close dojis. We focus from high close doji to what the weekly high close dojis are. So the top sectors that we start with are consumer discretionary. Chipotle Mexican Grill had a little high close doji. And, you know, the rules of high close doji is after a downtrend. So after a rise, I'm not really focusing on Chipotle Mexican Grill. After a rise in price, it's just the scan is just picking up what this stock is doing. I would be looking at Harley Davidson picking up a low close doji rather than a weekly high close doji. So I don't even want to look at it. Johnson Controls. I'm not looking for, as you can see, a lot of stocks had this huge trend, this huge breakout to the upside, and all of a sudden has just gone into a consolidation pattern. Is this a continuation? It might have a slight continuation pattern, but I don't think it's a good for me. I'm not looking to look for a buy here in this particular name, especially after we've seen this just incredible rally unfold. I mean, the stock has had a double. And I mean, anyone that's using even a Fibonacci extension rule or correction, you know, this particular name may start to have run its course. Earnings on this stock is on the 23rd, Johnson Controls. So I'll be honest with you, we'll be running daily scans in the room, but I just wanted to explain, when I'm looking for a stock and gives me a high close doji, I want it to be after a decline, not after a huge rally. So looking at that, if you are using this scan, in essence, I want to kind of get our scans down so that we can eliminate some of the noise and just kind of concentrate our time to the proper stocks that might be beneficial for us for trading in that particular week. Consumer staples, you had Coca-Cola. And after a huge rally, I remember we talked about Coca-Cola earlier last year. You know, and not to get distracted, but last week we talked and really focused on a couple very prominent patterns. The wedge formation and breakout of wedge formations and last conditional change candles. So this is a monthly chart. This is Coca-Cola, and you can see kind of like the wedge formation or the breakout. And what you probably want to start looking for is, you know, breakouts of the midpoint high of the wedge, which would have been right there. Breakouts, stops underneath the low of the bar that breaks you out, and even that systematic rule, I mean, kept you in. The dominant trend was bullish, and of course, another way to trade it is to look for last conditional change candle breakout or reversal of trend. So if you agree that this PPS sell signal, this long red bar here, is the last conditional change candle, when the market takes that last conditional change high out after getting now in a new trend, which is PPS buy signal right there, so it's a new trend, you have now a formulated breakout, and you can start looking at longs in that market. So whether this is a 5-minute crude, a 1-minute crude, a 2-minute gold, a 1-minute gold, an E-mini S&P, whatever it is, this particular setup pattern strategy is very effective, and we're looking for that same pattern in longer-term stocks for trades for the room, and that's what we'll also be focusing in on. So it's like, okay, we've got a setup in the market, we've got that great pattern, how do we get into the trade? And so you got several different ways to get into the trade. A, you can always go market order. B, you can use a stock replacement option. C, we could look for stop-ins with appropriate stop-loss orders, and y'all had kind of an introduction to how to utilize that. Constellation Brands. This market is in the funny thing is that it starts to end a seasonally strong period of time. It was one of my stocks that I'm more focused on looking for a sell when we get into the end of January into the 1st of February, because people stop to, they change their, resolutions, they drink less, you got Lent coming up. Remember, after Fat Tuesday, people tend to consume less alcohol going into the summertime. So Constellation, boy, I'll tell you what, this might be a good credit call spread opportunity coming into the next week or so, all right? So when we look at high close dojis, I'm just going through the list with us. This is Tyson. And Tyson, from a breakout standpoint, at $34 stock, it just had this huge consolidation and just had this huge run. It's going to be tough to get on the long side of Tyson right there. From energy, we had nothing on a weekly basis. Financials, some of these regional banks are still very strong, and from a seasonal perspective, they look really good. We were trying to buy in our own advisory service with PA Stock Alerts, Regions Financial, and we tried 3 times and just missed it. This popped up, by the way, and I'll share this one with you because it's kind of I do struggle giving the trades out that we're looking to do for those that are subscribers to PA Stock Alerts and for you guys who are part of my community. But I'm going to share this one with you because this is a stock that we are looking to get into, Kimco Realty, for disclosure. And one of the reasons I'm looking to get into it is because part of my seasonal buy list, all right, even though Kimco was not on my seasonal buy list or the dogs of the year list, which means stocks that had been lower on the year that got sold off going into the 1st of the year, generally by between Christmas or at the beginning of the year to April, tend to see rises, all right? So we had department stores like Stage Stores, Sears, JCPenney, Family Dollar. All those names are names that we look at buying towards the end of this month, headed into April, right? Kimco, REITs, AIV, HCN, AVB. Those are all names that I liked because of the fact that if the economy is starting to expand, we're going to start to see an appreciative move in commercial real estate and retail residential investment trusts. So the REITs, finding the right one as we take a look at investment real estate trusts going through here, first off, on a weekly basis, it kind of from like bottoms out in November and goes up into February, and then really shows another strong showing that lasts going again into May. We just generated a high close doji in Kimco. I think this is a very this is a stock that has a very good risk reward parameter. For one, look at what we did on a go over here. If you notice, it had this little breakout, and now we've formed this kind of like pullback, this trend. We formed a weekly high close doji. We formed a daily high close doji. So we got patterns within patterns. And look at this small little rally that we had over 1, 2, 3, 4, 5, 6 days. Of course, Fridays was a real big push to the upside. Look at the on-balance volume. It really had a nice breakout. Kimco Realty Corporation, typically we would buy a high close doji on the close of the next session open, but the fact is that we had this like Friday late rally. I would say that we could probably look for a small pullback in this market, probably around 29.30, 29.31 if you're interested. Look for a pullback there, and let's go over to edit, alerts, add an alert. All right, so I'm going to set an alert on Kimco. I really think that that's not to get a pullback into this area is probably not that bad. And then we can take a look to see what the daily person's pivots looks like. We change this. So for you traders, one stock, I can continuously say that I think that this sector, this space, the residential investment trust area may continue to outperform. And if we start to see For example, a little sector rotation. I mean, if you're sitting in a high flyer like a Google, a Priceline, and you want to put some money to work, I mean, let's face it. I think if you think the economy is going to improve, you're going to start to see a lot more fund managers get down to business and looking for opportunities that have some low risk. I wanted to also point out to you here, if we take a look at this, this is a 60-minute chart looking at today. I said look for a pullback to around 20. We wanted to look for a pullback at that 36 handle, and we have 26.25 for the pivot. We've got today's daily pivot down here at 25, as you can see, 25.82 or 25.92. Excuse me, 25.92. That the monitor is too far to my right. So 25.92. Boy, I kind of like this from you from a perspective of looking at technicals. Just drawing this line through here. We have this swing high. The market broke out above the swing high, and that would be that almost that same type of pattern we've been teaching you all last week that we're going to focus in on trades, right? So that's a swing high, right? Swing high. Now you've got a new PPS buy signal. You buy the snapback or you buy the breakout above that swing high. Once you're in, your stop goes below the low of the bar that got you in and both moving averages. So anyway, so that would have been a nice day trade technique, but I'm just refreshing your memory, going over that pattern because you'll see it over and over and over again, and that's what we'll be looking for in the room. Now, how would I trade this market? If we get a pullback somewhere closer, we set the alert here at 26.36. I would say if the market gets down, closer for day trading purpose, extends into that area, we might get somewhere down into this area here. Somewhere in that zone. So from 16, from a top of, say, 26.16 down to a low in here, I would say look for a PPS buy signal in that zone. And I think for a longer term trade, longer term meaning for the next 4 months, I like the investment real estate trust, and this stock looks pretty good for a potential buy for this room. And I think that's a good way of examining the market for a potential trade over and over and over all day long. That's what I'm looking for. That setup, that pattern, we're going to run those through those scans right there, okay? So next we look at healthcare. It's tough to buy a weekly high close doji after a long rally. So if you take a look, a lot of these stocks were all, just hyperbolic. Eli Lilly, this is one that popped up for us on PA Stock Alerts as well. It's broken out of this little downtrend line. It almost looks like as if it's getting ready for, friends, it does look like it's getting ready for one of these kind of like, wedge breakouts, these triangle consolidation and then resumption of uptrend. Look at the volume on a weekly basis. It really soared. Daily didn't really move that much, which tells me that we might try to maybe kind of revisit and test these lows. So around that 50.75, I like Lilly as well. Mylan, this is in the healthcare sector. Mylan's already taken off, and I can't look at that. So this is just looking for some stock trades for this week that we can kind of revisit for if we get these pullbacks. Maybe we get a 3 to 5 or 10% move, and I think that as the week progresses, the high close dojis, these scans for the week are going to kind of be important as we go through and filter out. I don't want to look for a high close after a rally. I kind of want to look for a high close doji that gave after a breakdown. So, and I want to do so in stocks that are entering seasonally strong periods of time. So that's our criteria filters that we're looking for. This is Ingersoll Rand, as we can see. Huge, obvious little problem there. Ingersoll Rand's $62 stock. Just because we had that little breakout up there, this volume action really speaks very loudly. I think Ingersoll Rand, and looking at industrial machinery, there's some other names that we might want to start looking at. So what I'm going to do is for today, I'm going to write down Ingersoll Rand, but I'm going to start focusing in the industrial machinery sector. Instead of Ingersoll Rand, there might be some other names that we could take a look at that might be better. And so when we take a look at Ingersoll Rand, the first name that comes to my mind would be Caterpillar, right? And Caterpillar, the funny thing is, we already discussed this last week. So a competitor in a space that's in a strong seasonal tendency, who has a nice wedge formation, we want to make sure that we don't forget about Caterpillar. I think Caterpillar has a better on-balance volume, has everything better about it from a trade perspective. So from last week's follow-up, I think this week we want to maybe take a look at Caterpillar and look at Caterpillar. I think if we take out that last swing high, which is 91.66, I think, you know, you've got a trend move to the upside. Let's also focus on any pullbacks to around 89.74 in Caterpillar. I think that'll be a very nice move. Caterpillar, 89.74. Set some alerts there in just a minute. All right. Now, let me go over and talk about, because I know the market's just opened here, telecoms, we didn't get anything, utilities. We want to look at technology. Micron technology in the semiconductor space. There's a lot of names in the semi space, and just to review, when we take a look at the semis, in my list of stocks, I had two names. We had JBL, and we went through this last week, so I want to revisit that and follow through. So JBL is one of those names that over the year is actually underwater. And JBL, even though it's a $17 stock, did not pop up on a radar screen to be a buyer. It didn't even generated a daily sell signal, but we want to kind of still focus on JBL because it is in my dog list. The next one is ALTR, Altera. It's in the semi space. We did a big analysis on this last week. We still have our annotations, as I promised you guys last week. Anything I write on these charts will be left on the charts. We could talk about it. So we don't have a daily buy on Altera. We generated a weekly sell on Altera. So we want to keep our eyes focused on Altera because it is in the space that we're starting to see other stocks move up. There are some stocks that are strong in this space and some that are weak. And the stocks that were weak should start to perform. As I mentioned earlier, the list that I put out are stocks that go up going into about May. So now all we have to do is look for a breakout above that high or look for a buy signal that might come down near these lows. Altera is not ripe for a trade for us to commit money yet. Next, let's look at, unfortunately, Teradyne started to move. It had a triple buy, and again, all last week, we talked a little bit about this. It has earnings out on the 20th, which will be next week. But man, this was a stock that, you know, it's hard to focus in on the exact stock, you know, for last week's trade based on this 50 list because, you know, we needed it. We were in a daily buy. It had already been in a weekly buy, and it broke out. It broke out of this high, which was 1791. And 1791, we had it, you know, once we broke out, if you were buying it, you know, we focused on a better setup, which was LinkedIn. But boy, I'll tell you what, I don't want you guys to get dissuaded from looking at this because from a longer term perspective, I mean, I'll do a little bit more research on Teradyne, but that kind of wedge formation, you break out, boy, this could be a multi-year type mover that we've seen that pattern over and over and over again. I don't, you know, I never can portray which is the stock that's going to be the big kahuna, double or triple in value, but I'll tell you what, a lot of those stocks that had double and triple moves had and started off with these type of formations. And more importantly, what they did is they had an accumulation of volume behind them. And this name has all of that going for it. So Teradyne, it's still on my list. It should be on the email that I sent out to you guys for the members. All right, so when we take a look at the semiconductors, we started off by saying, why did I get on this tangent? And I didn't really get on a tangent. I'm still stuck on the same subject. We had Micron Technology, and Micron Technology just had that explosive breakout. So we're looking at stocks that are still in that space that might have that same type of move. If these guys had that move and all of a sudden their competitors, people start looking at buying their competitors, we might see strength in that sector overspill to the names that we just talked about, Altera and Teradyne. Okay, so let's. I know the market's just opened, and I know we've been we're going as usual a little bit over, but let me talk about quickly our indexes and AD page. I think we got some a few names here we can focus in on for the week. We followed up with our seasonal buys. We have our Kimco, we have Real Estate Investment Trust, Caterpillar we could look at, and again, we still need to keep our eyes on Altera, ALTR, and of course Teradyne, TER is the symbol. More importantly, we take a look at the Friday's action, and we talked about watch for breakouts to the upside, and you saw Friday afternoon, of course, the market, you know, just took out all the shorts, popped it up to 36 or 38. How did the market respond from a week-to-week basis? The only questionable index was the Dow. The Dow hasn't had any, it's the weakest performer on a week-to-week basis because the bottom charts here represent weekly charts. The strongest from volume and combined volume with advanced decline analysis. The strongest was, of course, New York Stock Exchange Composite Index. Huge breakout, if you look right here. Huge breakout. Nice volume pattern to the upside, and the advanced decline had a huge breakout. Even the Dow, which paused, didn't move up or down on any volume, sideways on advanced decline. But boy, they were really getting on NYSE stocks, and we also see that representation of an uptick on the S&P 500. Good volume as well as advanced decline. So we didn't make new breakouts on the daily charts. As you can see, none of the charts broke out except for, even on the daily charts, one market, NYSE. Widely followed New York Stock Exchange Composite Index. So what that typically shares with us is that if you get a breakout of the advanced decline, typically within a day or two you get a follow-through move. So the New York Stock Exchange, the NYSE, with that particular breakout move is saying that the stock sector is still very strong. So, you know, we get a pullback, and I don't want to say that every time we get a bull market it opens lower, trades higher, but typically that's been the pattern. So if the market like opens a lot higher, we typically get sell-offs. A bullish pattern, we open lower, trade higher, and that's kind of like we've traded a little bit lower today at 1835. We traded from the German or European session economic numbers. We saw this little market, a little sell-off in this market, and we've gotten down to like 31. We're back to 35. So in the S&Ps, you know, it's looking at these, the amount of accumulation, the breadth of the market, and the volume of the market. You know, the fact that we're in a PPS daily buy signal on the S&Ps, PPS daily buy signal on the NASDAQ, PPS buy signal on the Russell. Didn't happen on the NYSE yet, but it might come today. And of course, the Dow's been in a daily buy. It's my interpretation that we are going to see sometime this week a breakout of that high. If it doesn't, okay, if we don't break out of that high after maybe 2 days, today and Tuesday, a 2-day, you know, it's the beginning of the week. If we do not break out of that high, if based on these advanced decline levels, right? If we don't break out to make a new high and the market starts to take out last week's low, you're going to have to watch to see confirmation if stocks are being sold off. Otherwise, it's a trading range. It's just a trading range. But to me, I'm seeing that this market's got more strength and more resolve to make newer highs and possibly this week. So do focus in on that. And again, you guys are in the room every single day with me. You'll get we'll be looking at this for the rest of the week. Every day we'll come in here and take a look at the market. If you're not joining us, then we strongly urge you to get the professional baggage so that you can monitor the condition, the health, and the breadth of the market. Let's take a quick look at other markets, what generated daily buy signals last week, and what markets didn't, and that'll wrap up in summary and conclusion our planning and scanning kind of for the week. As the page refreshes and loads right now. All right, so we have looking at a daily basis, S&P, Russell, YM, NASDAQ. The bonds had a little breakout to the upside, and I think we had some good analysis last week, you know, with looking at the bonds. And so now that we're up at this 130, I think the market, you know, it's going to I don't know if it's going to be capable of pulling back into this area, but this is a breakout, a benchmark with a confluence of moving averages. There'll be a lot of support down here over the next couple days, 129.28. From a seasonal perspective, if you take a look at this, we were warning people about this support in the bond market, this rounding bottom formation, the knob spread, the relative strength analysis. Looking at bonds here from a daily and then change over to a weekly. Last week, bonds generated a weekly buy. So, you know, there's only two ways. If you get a weekly buy, you generally see follow through the upside, small little pullbacks. The only time that this market would be if you get a weekly buy, like over here. You got a weekly buy in the marketplace. And then the very next week, it was negated, right? It's very unusual to see that. We had one over here, weekly buy, and it was negated. I mean, this was obviously coming into a different time period of the market. So what I always kind of concern and worry myself, and I want you guys to visualize this. One of those trade setups, if we get, and I said, we're going to teach you how to trade PPS a little bit better so that there's no interruption and it's just, you know, it's kind of like my way or the highway, so to speak. So with that said, some of my observations in using PPS, you get a buy signal. Now, in the past, you know, there's several ways to looking at a buy signal. So here you get a buy signal, a sell signal. It's a low close doji, right? And all of a sudden, you know, the market gives you follow through to the downside. Then you got a buy signal, and you're at monthly support. Most people would say, hey, I'm at a buy signal, I'm at monthly support, and that looks pretty good. Well, if all of a sudden you got a buy signal, notice that we're underneath the moving averages. So we want to see the market trade above the moving averages. All of a sudden, the market breaks down. So moving averages act as resistance. There's another element here that I also want you to focus in on. If the market's going to be any good, then it needs to make a higher high. So what negates a buy signal? The very next bar turning into a sell signal. So if we wait a bar, if you wait for, like say for example, got a buy signal and you made a higher high. Got a buy signal and it makes a higher high. Two things you do. You wait, you get a pull, you're going to be looking for a pullback to buy, and sometimes you don't get them. So what's the next alternative? Look for a breakout above the secondary high and go with the dominant, the new defined trend. So now the new trend, it's proven itself because we have higher highs, we have higher lows, got closes greater than past or prior highs. Now we can trust that buy signal a little bit better. So I guess what I'm saying is, do we trust this buy signal on a weekly basis with the bonds? We did make a higher high. So traders will be looking to buy the pullback because they like to buy value. They like to buy cheaper. Sometimes buying cheaper will get us into trouble, right? You buy cheaper, and then what happens? You get a two-bar reversal, and it just breaks down. So what I would be looking for in this type of situation is if we get a mild pullback near these moving averages, I wouldn't want to be a buyer until we got back above that swing high and go with the dominant trend because it's now pulled back, it's supported, or if I do buy the pullback, I'm going to buy very lightly. And then I want to add to the position when we start to break out to the upside. So why would I be buying bonds at 130 on a pullback, unless, you know, especially in this environment? One of the reasons is from a seasonal perspective, we don't see sharp declines in bond prices, number one. You get that fiscal year change, you get pension fund monies that change, and if the Fed and the economy and the economic numbers are not perceived to see expanding economic condition, then bonds are still, with interest rates, there's still a value. If you do get a correction in the U.S. equity market sometime at the end of January into February, which typically right around President's Day weekend, that weekend we get sell-offs, bonds will still find value. So right now it makes it a very tough trade in bonds to be on the short side because you're in a weekly buy and you're in a daily buy. Hopefully everyone understood that. One of the markets that I kind of like here is the euro currency, and we talked about this in last night's video, the fact that the small speculators are the only ones net short the euro currency. I don't know if you guys find that funny, but or sad, or whichever way you want to look at it, but the commercials are slightly long. The large speculator hedge funds are long, and the only one on the short side holding the bag are the small speculators. And they're probably, from a weekly basis here, if you take a look at this net short position from a weekly basis, the small speculators are actually one of the largest net short positions since about right there. Does everyone see that? Let me put my crosshairs over that point in time. So here's their largest net short position right there that week. Everyone see that? And the market did rally. So from where did it rally? It went from 129 to a high of 134. So it had a 500-point rally. No big deal. It's only 500 points. Last time they were heavily net short to this degree, you know, they were shorting the market, and they had a hard time getting out of their shorts as the market was rallying from this low of 121 to that high of 132. That was an 11-point rally. So we saw that the hedge funds were also short, but covering their shorts. Commercials were long and liquidating their hedges. So there was a shift in the dynamics of the ownership of the market. That's why I like to focus in on the small speculators, because when they're just the only guy in town holding the bag and the other two groups are actually net long, you might have a change of scenery, at least from going from the south of Europe to the north of Europe, monetary-wise. I'm talking looking from a market going down to up. So here's a last conditional change candle, and you look at 137.43. I mean, if this market gets above that area, I think it's going to spook a lot of shorts and cause an upside move. So just like on Friday when I talked about the last conditional change, you may want to look at breakouts, either buy signals on the euro currency at against daily support near here, 136.20, let's call it. Or look to buy any breakouts above that last conditional change candle. Looking on a weekly basis on the euro, we are in a sell signal that the market did not go down. So if a market won't go down on a weekly sell signal, if it reverses course and it takes out that level in here, you have the potential for a major aggressive move. And I'm not going to say how aggressive, but I will point out that, you know, monthly pivot, person's pivot, is not in a, it's giving a higher green, it's giving a higher red, it's giving a bullish monthly outlook and a quarterly outlook at that. So this is the JP quarterly outlook. So the longer term trend, you can all see that, you know, what's the trend of this market? What's the longer term trend of the euro? It's up. So it's rallying on the upside, and it's rallying on the upside with an accumulation of volume here. So it wouldn't be a surprise to me to see the euro up, especially with those matrix of the small spec short. So I think those were the variables that I wanted to cover this week and leave you with, and some of those points of interest. So that concludes today's planning and scanning. I know we went a little bit over, but I think in light of the way the market starts to trade on a Monday, people start getting the sand out of their eyes and say, okay, what happened last week? What do I look like? You know, this gives us some great ammunition to focus in on our seasonal buys, looking at the REITs, our semiconductor sector. You know, we just discussed about the department stores, and again, we don't want to lose face with Sears or lose sight of Sears, JCPenney, Family Dollar, and then, of course, looking at the material sector with Caterpillar rather than Ingersoll Rand. And so that's Kat, that's Kim, Altira. We still keep our eye there. And I hope you guys enjoyed today's session. Thank you all very much. And that does, without a doubt, conclude our planning and scanning.